Being invited to testify before a Senate committee or subcommittee like I was this week was a real validation of my entire career. Professionally, it validated that what I've been doing all along and that the passion that I have shown for sales tax over my career has been seen by others to be in support of reasonable tax policy, and that I could be a voice not only for small businesses, but also for my peers and those that help advise businesses, but also for businesses of all size. And I'm just totally honored to be asked to do this, and to be asked to do it for a second time is even more humbling. Personally, you know, something like this is like on your, career bucket list. And to be able to have done that 2 years ago, I was just I was thrilled, and it was exciting, and it was scary. To be asked a second time, it wasn't quite as scary because I knew what to expect, but certainly, it was just a thrill to be there and to be part of this is gonna sound a little corny, but part of a little bit of history, and to be able to I'm in the congressional record, on video, my written testimony, and, it sits there for a long time because my 2022 is still up online that anybody can download and see. So to think about the fact that I'm out there and available for people to get to know me, and get to know what I stand for, in what I do in my career is really just it just kinda gives me tingles. The Wayfair decision was monumental. It turned the sales tax world upside down and inside out. It changed everything that we know about sales tax. And over the last 6 years, there's been a lot of refinement of what exactly the Wayfair decision means and how it impacted businesses. And I hope what happens over the next few years, hopefully it won't take 6 years, is we will get some of the clarification that we need. Um, I hope that the states recognize that sellers can't be held 100% perfect, that that's not a fair burden to put on retailers, especially, as I said in my testimony, that, the states don't even give the sellers all of the information that they need in order to do the duty that the states are asking them to do. And so what I hope is that more states will provide better information. Um, as I talked about in my testimony, I think the streamlined states with their disclosed practices and their taxability matrices and other information that's published is a huge help to businesses of all size. And if we could just get more of the states to publish something in as easy a readable format as those documents are, I think that would be huge. I ideally would love to see most, if not all, of the states become members of Streamlined or do something very similar to what Streamlined offers, because that is what is going to make it better for everyone. The states want more revenue. Businesses, for the most part, are willing to comply as long as it isn't too hard and too expensive for them to comply. And so I think that's what states really have to do. I hope that businesses work in conjunction with organizations, whether it is Streamlined or whether it is the MTC, whether it is their local governments, their state and local governments, to come up with what are reasonable expectations of sellers and what is reasonable compensation to those sellers. So the federal government does, I think, have a role. It is not the primary role because sales taxes are certainly state level taxes. And so the states have the right to set the tax policy and to set the taxability and the tax rates and all of those other things that go into making sales tax what it is. However, there are constraints that are put in place by the federal government under the Constitution, particularly the Commerce Clause. And because of that, the federal government has the right and has the obligation, even more so than the right, to make sure that companies that are doing business in interstate commerce are not unduly burdened by having to comply with the various different state tax laws. And so I think the states have been, you know, able to create their policies. The Wayfair decision gave them the ability to impose their obligations on more and more sellers. And unfortunately, what the Wayfair decision didn't do was really define what is that undue burden. And so I think the hearing that I was at, we talked about what is that undue burden or what are some of the components of that undue burden. And I think that's where the federal government can come in and say, if the state has made it easier for businesses from outside of the state borders to comply, then it is okay for the state to require them to collect the tax. But if the state makes it very difficult, then there is an undue burden, and therefore then there could be constraints on whether that state can impose a collection responsibility on an out-of-state seller. And so I think that's where the federal government needs to come in. They're not gonna be able to come in and dictate what is taxable, what is not, what the rates are. I think it's going to be very difficult for the federal government to say one rate per state, but I think they can say that states need to make it easier, particularly for out-of-state businesses. And one of the ways to do that is to have one rate per state, but there are other ways that that can be done. And so it'll be interesting to see what comes out of the hearing and what are the recommendations that are made, and if a bill does come forward, what exactly does that bill look like? I think some other options are requiring states to be members of Streamlined, and to come up with or adopt the common definitions. So in my testimony, I talked about the Twix bar example and, how the streamlined states all have to have that same definition. So all of the streamlined states define a Twix bar as food because it has flour. However, the states can decide whether to tax or exempt it. And then on the flip side, if I actually have something that is a candy bar, so I have something that doesn't have flour in it, the states also all define it, the streamlined states all define it exactly the same. It will be classified as candy. But the states still retain the right to say candy is taxable or exempt. And there are some states that say candy is actually, it's ingested, it's food for human consumption. We are going to exempt that candy. However, others say candy is not essential food and we're not going to exempt it. And but all of those 24 member states define it the same way. The other states, the non-streamlined states, they can define it any way they want. And in my written testimony, I talk about how Texas defines it. Illinois defines it with the flour rule, so they happen to match the streamlined rule. The state of Maine does something completely different. California is completely different. And so it's difficult for sellers in order to allow them to properly code the product, they need to know that a Twix bar is not candy. And in their state, it might be candy. And so they're mapping it to candy. And now, if they're selling nationally online, they're going to potentially be doing it incorrectly. So I think that's one of the big things that could happen is the states have to adopt this uniform definition. theory and go in and do that. I think simplified registration, I think simplified returns, the states that are the home rule states, Colorado, Alabama, Louisiana, that all taxes at all levels need to be administered by a central agency. I think Alaska, for a state that doesn't have a state sales tax but does have local taxes, what they've done on the remote seller side I think has been really creative. And they came together, created a new agency that if the locals want to collect from remote sellers, they have to join this centralized agency. And it is a single registration, a single remittance. They actually send out notices when a new jurisdiction joins. And so I think Alaska could be a really good model for something like that. And so I think those are some of the things, and then centralized depository of information. Streamlined is great that all of their state information is on that one website. You can go one place. You can go one place and download all 24 states' rate databases, where the rest of the states, you have to go to each individual state page. You have to find where it is. You have to figure out what the format is. How are you going to download it? How are you going to import into your system? So I think those are some of the other things that might be able to be done. I think being able to represent small businesses to the Senate is something I take very seriously. I am a small business. I know what's involved from my professional experience to be compliant with sales tax. I know what has to be done, but I also know the challenges that small businesses face because I am one. And I know things like what kind of resources do you have, human capital resources, and the amount of time and effort it takes to comply with sales tax. And if you are a small business and maybe it's only you as the owner, maybe you have an outsourced bookkeeper, but you don't have the time to do everything that it takes to do sales tax. I think that gives me a different perspective than maybe somebody coming in that works for a large accounting firm or a large law firm, that they don't really understand what it means to be a business owner and what it means to have the multiple demands on your time, on your people resources, and on your financial resources, and having to make those decisions about, do I do I invest in technology to take care of what is a legal obligation? And I am, a big believer, and I am very much a rule follower, that even as a small business, I do my darndest to comply with every law that I'm subject to. And, sometimes that becomes a very expensive philosophy, and sometimes you have to say, you know what? The exposure, the risk is so small that that's a risk I'm willing to take. And I think a lot of businesses take that mentality. Now, the difference is with sales tax, that risk can very quickly escalate. Because if you don't realize that your sales are growing exponentially, particularly in a state, that you might be incurring more risk than you meant to. Maybe when you made that decision, your risk was $1,000 of back tax. Well, now all of a sudden, maybe it's 6 months later, maybe it's a year later. Now all of a sudden, that number is $10,000. Are you still as comfortable saying, I'm not going to make the investment for $10,000 as I made that decision when my exposure was $1,000? And I think that is one of the challenges that small businesses face every single day. With your limited resources, where are you going to put those resources? I'm not saying that businesses shouldn't comply with the tax laws, but they have to be able to still stay in business. And that's where I think what is happening in these states, and the minimal amount of compensation that the states pay to have retailers be their collection agent is just unjust and unfair. Every not just tax professional, but every business person that has an obligation with sales tax should be, number 1, aware of what the requirements are and need to, do enough uh, information gathering about your business, about what the tax laws that apply to your business so that you're not caught off guard. I think that's number 1, the most thing that everybody should do. I think the other thing is to be involved with whether it is a tax organization. I'm active with COST, the Council on State Taxation. They are a very vocal group in making sure that uh, businesses have a place at the table when we're talking about tax policy. There are other organizations, the Tax Executive Institute, TEI. There are state tax foundations. I'm involved with the Illinois Taxpayers Federation. So there are different organizations like that, your local chamber of commerce. All of those are organizations that can advocate on your behalf as a business and bring all businesses' voice together to go and actually help make make the points that maybe you might not be able to make as eloquently as they can, or maybe as visibly as they can. A lot of businesses don't want to rock the boat. They don't want to go complain to government because they don't want to be subject to an audit. And so these organizations are great ways to take advantage of doing that. So I think that's an important thing to do. The other thing, if you are in a business that is willing to be vocal with your Department of Revenue organizations, many of the states have taxpayer advisory panels. You can volunteer to be on something like that. And that's where the departments of revenue, they have different meetings about different things. I have served on the Illinois Department of Revenue Audit Advisory Panel. Hasn't met in a while, but where they would have meetings usually about twice a year. And, we would all get together. It was predominantly practitioners that were on that, but I think there were a couple of taxpayers. And we talked about what are the challenges with the audits by the Department of Revenue? What sorts of things make it really difficult to undergo an audit by the Illinois Department of Revenue? And also, what things are they doing well? So it isn't always a bashing type of situation, but also, telling them these things are good. Can you do more of these sorts of things? And so I think those are ways that everyday tax professionals or business people can get involved. I think the other way is just being informed and keeping on top of things. And, one of the things in all of our classes when we teach is the most important thing to do first before you start reading tax law is make sure you understand your business. So don't be on an island in the accounting department, in the tax department. Get out there and understand what your business is doing. Make sure you understand how you operate, where you operate, what do you sell, how do you market, how do you contract, how do you invoice, how do you pay your bills. All of those things are so important to be able to advocate on behalf of your company and also make sure your company can stay in compliance. And those are all great things that anybody can do.